I want to implore the retail stock market investors to understand that we are leaving the slow month of August and entering the worst calendar month of the year in the stock market for returns. Yes, folks, September, not October, is the worst month of the year. That said, to me, as an outsider, it feels like the fund flows and the big boys are getting ready to drop the market on FOMO retail investors. As an example, we saw Nvidia come out the other day, trade as high as $500 after hours. I think they opened over 500, but traded down the entire day, down since then. Is AI dead? Is all of these, stocks that everybody talks about just over? Are we going lower? Taylor, 10-year Wall Street vet. Is Wall Street gonna do it again and just run over retail?
You know what? This was the Nvidia news was seemingly the ultimate buy the rumor, sell the news type event. So essentially, everyone going into Nvidia's earnings says, hey, listen, this is the largest benefactor of the AI craze because they make the back end semiconductors that charge all of AI that's being bought up by Microsoft and the big companies right now. So they're the ones actually seeing profits based upon AI, not just the promise of future profits. So that's going on. And people are saying, and myself included, this is an incredibly important earnings release that comes. Earnings get released by NVIDIA, blowout, like
Yeah.
blowout numbers.
And
And NVIDIA
raised. And raised.
and raises on projections moving forward. Exactly. The whisper number on the street was $14.5 billion of revenue next quarter. They put up over 16 as the new target. So
Yeah.
just an absolute blowout across the board. And so what you actually had though, the next day Nvidia traded up as it absolutely had to. The numbers were absurd, but the market traded off. And it's like, oh boy, did the market price everything ahead of time? What NVIDIA just released? Do they already know all that news was coming out? And boy, now that it hit, we'll pull the rug under retail investors. It's the same thing, the buy the rumor, the sell the news.
Yeah. But to me, it even feels worse than that, right? We were talking about the Magnificent Seven. If you look at the
Yep.
Magnificent Seven, which, my guy on Sunday did, Dan, there are broken charts. They're all
Oh,
trading
they're
at,
shattered. They're shattered charts. Yeah,
yeah, yeah, they're shadow charts. It kind of feels like retail, my opinion, they've been trained over the last 2 years to buy the dip.
correct.
I believe that fundamentally that works until it doesn't. And September might be the month that it rolls over and we see a crack and we trade significantly lower. Um,
Yeah. Yeah,
Thoughts?
without going into like the technical analysis, the charting of things, just talk about Apple real quick. Apple was up, and I'm going to get the numbers wrong, but Apple gapped down very hard over a call it 1 week period of time. And then what it's done since then is chopped sideways and lower. That
Mm-hmm.
is just a bad momentum type chart to look at. You see this gap downwards. Okay, we got some bad news here. Now you're trading sideways, but every day you're trading sideways where it's going up and down a little bit, the trend is slightly lower. And that
Yeah.
is something you look at and go, I don't know that I love this. An interesting thing from when you take a step back, there are some institutions that track what hedge funds do. And what they can do is see daily pricing of these hedge funds underlying assets and how much they change relative to what's going on in the market. Right now, hedge funds have the least exposure almost that they've ever had to stocks. And you can tell
Really?
that by you look at the movement either upward or downward in something like the S&P 500 and you compare it back to the actual performance of the underlying hedge fund indice. And right now it's the most muted it's been in like 40 years. And so hedge
So
funds are incredibly underweight risk assets, which are stocks.
yeah, I mean that's I'm seeing flows and rotations out of tech, communications where all the internet
Yep.
stocks are.
Yep.
It
Yep.
just feels like it frankly feels to me like the market wants to go lower. Um, and I think there's going to be a lot of retail that tries to step in front of it and try to, buy the dip one more time. I
Yep.
it's just it feels like September might be the month that runs over retail.
It's funny because now you're getting a little economic wind shifting, and the economic
Yes.
prevailing wind is actually showing more positive than what people had originally anticipated playing out right now. And
Yeah.
with that, again, it goes back to that buy the rumor, sell the news, because the rumor was, man, maybe we might be seeing this soft landing play out in front of us. And whether that happens or not, that's what got priced. But now all of a sudden, when you're starting to see GDP estimates from places like the Atlanta Fed come out at now 5.9%,
Yeah.
up from
I just
5.8,
pulled it up.
it
5.9.
just
Yeah.
keeps getting crazier, right? And now that the estimates are actually there based on true quantitative analysis, that's not any conjecture
No,
or
that's
anyone's
yeah.
thought process. Those are numbers that drive that. And now that you're seeing the numbers come in where they are, the market's starting to sell off and saying, hey, even if things get to where people are projecting at this point, man, valuations are really, really, really stretched.
Yeah. And then how have earnings been, right? Are we having our third quarter of negative earnings, right?
Yes.
Kind of the earning recession. So there's three
Yes.
quarters.
About 5% is the overall average negative year over year earnings that were posted for the second quarter. And going forward, the earnings estimates for the third quarter are about a positive 5%. This is for S&P 500 companies. And in the fourth quarter, about a positive 8%. 2024 for the calendar year, a positive 12.2%. Yeah, 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 yeah. I see you laughing. I see you laughing because that is really strong optimism there. That is GDP
Yeah.
numbers that are coming in at plus 5 point whatever percent that is going to have to come to fruition in order to drive out these earnings estimates that the current analyst, street expert, quote unquote, is anticipating.
Yeah. And then there have been some retail earnings. There's some more coming out this week, like Big Lots and Dollar
Yep,
Tree, I think, or Dollar General, one of those two.
yep,
Most of the retail earnings have been bad to horrible,
yep,
with a couple of exceptions.
yep.
Um,
Yeah, I think it's been an interesting when you look at retail in general. I totally agree with you. The earnings as a whole have been ho hum. But what's nice to see for the first time in a long time is that sectors aren't just trading in unison. Hey,
mm,
tech's up, everything's up. Tech's down,
right.
everything's down. Oil up, down, whatever it is. What you're
Mhm.
starting to see is some bifurcation. To your point, you always talk about good operators, and you're talking about
Yep.
good operators in the real estate space, right? But there are good operators in the clothing lines. And what you're
Sure.
seeing is Abercrombie posted blowout earnings, and you
They
look at
did.
them and go, hey, overall the consumer seems to be not spending quite as much on clothing, but damn, look at Abercrombie, good for you, do your thing, you are killing
Right.
it. And boom,
Yeah.
the stock bounced because of it. On the other end, you see some people, and I'm not saying these are excuses,
Hmm.
but boy, they often sound a lot like excuses, like Dick's Sporting Goods, who sees some real, and this is an upstate New York company, born and bred very close to where Dick's was originated. So I have a little soft spot for him, but they produce terrible numbers. And what you had them say was theft. And they call
Yeah.
it shrinkage in the retail
Yeah.
space. Yeah, theft just picked up that much to cascade your stock down 25% on one earnings release in one single day. Target named it. A lot of them are using that as an excuse. And granted, is theft up? Apparently it is from the experts that are talking about it. But boy, is it not easy to say theft or when the US dollar is trading a certain direction for you to say Forex as a company that does a lot of business overseas. I guess what I'm saying is the market does provide you opportunities to make excuses, and maybe there's some excuses going on in the retail space around theft right now. We'll see.
Yeah, it's going to be very interesting. The end of the year, right? It's in real estate, it's a slow season. Uh, we're heading into the fall and winter. It's going to be a wild end of the year. Taylor, you put out a lot of great stuff. Where can people find you?
Thanks so much, Michael. Yeah, follow us at Life Goal Investments. We're on both Instagram and TikTok, putting out daily content. Rather, I put some stuff out today off of the New York Stock Exchange floor from a week ago. So
I
go
saw
check it
that.
out.
Yeah, you're looking all fancy in your tie, talking about bricks and all of that. Folks, go check them out on Instagram and TikTok. Thank you, buddy.
Thanks so much, Michael.